start with the first question. The first question is about whether a commissioner of appeal, can take up a case where the proceedings before settlement commission abates. So when you say abates, it is relieved. So it's no more under the settlement commission. So can an appeal be filed for a case in which settlement commission abates? So it's no more under settlement commission. Can it be taken? So this is the question. So this is a very brief descriptive answer probably we need to give. For this, we need to understand, in fact, we need not understand about settlement commission also. What we need to understand with respect to the cases which can be filed before, the orders which can be appealed before CIT appeals. So if you actually see CIT appeal, section 251, subsection 1. Section 251, subsection 1 lists out the powers of Commissioner of Appeal in disposing a particular case. So when they say powers of Commissioner of Appeal, it tells you what can they do with a particular order. So when you are appealing against an order, what are the powers that they have? That is, can they increase the tax value, or can they reduce the losses? So all these things is what you call it as powers. What can they do with that order? Possibly what can they do? They can increase the taxable income, they can reduce the losses, they can increase the tax payable. So these things, right? So it could either be favorable to an assessee or not favorable to an assessee. So these adjustments, whatever you're calling, is what the powers that you're referring to. In that there is clause AA, which says that an appeal against assessment order before the settlement commission abates under section 245 HA. In that cases, what can he do? He can confirm, reduce, enhance, or annul the assessment of whatever has been passed earlier. But you should make sure whatever material has been furnished before the settlement commission should be produced here also. So whatever has already been produced before the settlement commission should be available on record. And whatever results on the inquiry, so what did settlement commission finally held? So those results should also be shared with them. And then whatever evidence was recorded by the settlement commission. So what was submitted, what was held, what was the evidence. So these three things is what should be provided. And finally, any other material which is brought on his record. So typically, whatever has been presented before the settlement commission, whatever has been held by the settlement commission, whatever has been recorded as evidences by the settlement commission, all this put together should be available in front of the Commissioner of Appeals. Only then he can he will have the power of confirming, reducing, enhancing, or annuling the assessment. So that's what it's being referred to as the powers of Commissioner of Appeals. So this is as far as the powers goes. Just for an additional information, the section 245 HA, that is related to settlement commission, is not applicable. From 1st February 21. So it is not applicable from 1st February 21. Instead of that, there is a new scheme that is announced, which is dispute resolution. So there is a separate chapter which discusses about this. So the settlement commission is now overtaken by dispute resolution commission. I guess somewhere in August 21, it was implemented. So what is currently there is this dispute resolution, whether the same power which was actually provided to settlement commission, abatement of settlement commission order, whether the same provision is also applicable for this dispute resolution under section 245 MA. Whether it is applicable or not, as of now, 251(1) is not amended. So section 251 subsection 1 clause AA is not amended, or a new clause is not introduced to bring in this 245 MA. So as of now, what it was there as on 1st February 21, based on which a settlement commission hearing was, an order was abated. So whether an appeal can be filed, yes, it can be filed. The only thing that Commissioner of Appeal should take care is, he must make sure that all the material provided before the settlement commission, whatever was held before the settlement commission, whatever was the evidences recorded by the settlement commission, all of this should be provided, along with any other materials must be brought on his record. So if that is done, he can confirm, reduce, enhance, or annul the assessment order of whatever has been passed earlier. So on to question number 2. So what exactly is question number 2? It is typically Mr. Wallish. So here he has approach to the settlement commission. we will actually keep the word settlement commission as typically in these days, in current scenario, it is dispute resolution. So we'll just the word changes. Otherwise, the question and the answer, everything remains the same. So he has approached for waiver of interest. What exactly is settlement commission? See, I am facing unnecessary complications because of these proceedings and other things. Why don't you give me some relaxation through a settlement? I'll come forward and say, okay, I can pay this much, or I can go through this much. Why don't you agree with me? So this is an arrangement between the assessee and the income tax department relating to additional taxes payable. That is, it could be interest, it could be penalty, or whatever. So Mr. Wallish has approached for waiver of interest under section 234, 234C. The settlement commission has partially waived. So they have not completely waived off, but they have partially waived, and they have also refused. They have refused to grant interest on refund. So typically, any interest when being repaid, when an amount is being repaid, interest has to be paid by the income tax department under section 244A at 0.5% per month. So this 244A is applicable for refunds, whatever is being paid. But here, the settlement commission says, I cannot grant refund. So he says, refund cannot be granted. That does not provide payment of interest in such cases. So for interest, I cannot give you a refund at all, because it is like for interest, I'm again giving you interest on refund. That is not allowed. So this is what they were. So we need to understand two things, or possibly only one thing. What we need to understand is typically, what is the contention? That is, what is the provision says? What is the power of settlement commission? What is the provision of 244A? So we are going to understand the power of settlement commission, and we are also going to understand the provision of 244A. So this is also a question in November 2020. So now we need to discuss the correctness of the settlement commission. So what is supposed to be the powers of the settlement commission? As far as the settlement commission goes, as we said, they can take up the cases, discuss a particular settlement scenario, and possibly provide a relief to the assessee in various proceedings. So now this exact issue came up in a Supreme Court. It's a 2017 case in K. Lakshmanasha and Co. So typically, in this case, what was held was, there are certain provisions which are statutory. That is, we'll call it as statutory. There are certain things which is statutory, which means it is not about discretion, whether you can apply or not apply. It is not about that. So once there is certain provisions, basically a statutory provisions, it is automatic. It is automatic. So no one needs to no one needs to say that pay along with interest under section 244A. So is this what the provision says or not? So the court discussed this to understand whether 244A is a statutory provision or not. What do you mean by statutory provision? It is automatic one, which is there is no one that can object to it. It is automatic. The right is automatic. So this was what was discussed. So what was held was, the statutory obligation to refund being non-discretionary. Non-discretionary, what do you mean by the word discretion? It is at my wish. If it is at my discretion, I would say whether I wanted to appear or not appear, right? That is my discretion. If someone is calling me for a particular time, please meet me at 9 o'clock. If I wanted to meet them at 9 o'clock, I'm okay. I will go and meet them. If I do not want to meet them at 9 o'clock, I will not go and meet them, right? So it is my discretion whether to go at 9 o'clock or not. There is a provision asking me to come at 9 o'clock, but whether to go or not is my discretion. So that those are discretionary. So what do you mean by non-discretionary? You don't have an option. There is, let's say it's a boss on a particular situation. It is a mandatory attendance. He is asking you to come at 9. You will have to go at 9. So that makes it a mandatory, right? So that is not discretion. So there is no option available. So the court said it is non-discretionary, and it carries the right. It carries the right. So whatever amount is being refunded, it has to be paid along with the interest. So that's what the provision says. So the right is non-discretionary and statutory in nature. So this is what said. So they said it is very clear. There is no confusion. I don't know how you got confused. It is a pretty clear provision. So whatever it is a right to assessee to be provided the thing. And they also said it is not procedural. This is another word. a beautiful word in the case law where it says it's not procedural, which means it's not process oriented. No one needs to see whether it is approved or not approved. What is step one, step two? There's nothing of that kind. 244A says when an amount of tax paid by the assessee is to be refunded, refund it along with the interest under section 244A at 0.5% per month. So this provision is statutory, non-discretionary, it is automatic, and it is not procedural. So these are the things that was concluded by the Supreme Court. So what they said is, it is enough if the refund becomes due under the income tax. So what is required as far as 244 is, there must be a refund that is due to the assessee. That is the only thing that matters, is nothing else matters. So they said assessees are subject to be entitled to receive simple interest. So we said it is 0.5%. They have moved on to say, they have moved on and said the expression due only means a refund becomes due pursuant an order. So when you say due, moment it is due under the act, it is automatically appearing. It could either reduce or waive tax or interest. It does not matter. Interest being waived is discretionary. One of the argument put was, the interest, whether to allow that interest or not, is my discretion. Then 244A also becomes my discretion. Court said, see, whenever you say due means your tax plus interest plus anything, tax plus interest plus etc. Whatever is supposed to be repaid, refunded to the assessee is what is due. So that due, moment this arises, that there is a refund of interest or refund of tax, automatically 244A comes in. So it is automatically, it is 244A is added. So this is what the court said. So court said, see, just because it is relating the interest, allowing settling in settlement, you actually waived off certain interest. That is discretion. But even then, if there is any due or something, that is not discretion. So that is automatic. So the moment discretion is exercised, refund becomes due. So that's what they say. Moment refund becomes due, it becomes automatic. So it is a mandatory right to claim. So it becomes a mandatory right to claim interest that springs from that particular portion of due, whatever it is. So in short, whenever 244A is applicable, it is statutory in nature, it is not procedural, it is an automatic one. It provides a right to claim by the assessee. When you say due, moment a discretion is being attained, that a tax is due, an interest is due, or some fee is due, then automatically 244A starts accruing at a simple interest of 0.5% per annum. So that's the answer. So they also added on and said, the earlier, this ruling, that is in the Lakshmana Shah, was actually against the ruling of Karnataka. Basically, to just summarize, Karnataka High Court said, yes, it is discretion. 244A is discretion only. So it is right in Settlement Commission in saying that they cannot allow 244A interest. They said it is right because Settlement Commissions has that power to do that also. So Supreme Court overruled the decision and said this right to claim interest is actually automatic and it cannot be discretionary. So that's what it said. They overruled the court of the decision. So overruling the High Court decision, the Supreme Court held that assessee has a right to interest on refund under section 4. So in applying that rationale in this particular case, whatever was held by that particular settlement commission is not correct. So that's what we'll have to summarize. So when you are actually summarizing a lengthy question, probably you can write, if it's relating to a ruling or something, brief fact. So start with probably fact. And then if it's a case law, explain the case law and then conclude. If the case law, if required, you can also explain the provision. So either you explain the provision in the case law, but it's case law itself is going to explain you the provision. Like in this case law itself is explaining the provision. In that case, you need not write the provision independently. So in that case, you'll have to write the fact, you'll have to write the case law, and then finally conclude it. So this is what you have to, depending upon the mark, you'll have to decide how to actually summarize this in a better. We'll move on to question number 3. So what is question number 3? A petition for stay of demand was filed. So there is a stay of demand filed by a company before the ITAT. In respect of a disputed demand. So of course, ITAT will, when you're filing an appeal, it will be for a disputed demand. The appellate tribunal granted stay. So the stay has been granted. So stay has been granted from 1st of January 2022 for a period of 180 days. So what does it happen? It happens to be, if you say 1st January 2022 plus 180 days will be what? Close to 6 months, right? So for time being, we'll keep it as 30th June 2022. From the date of such order on deposit of 20%. So this is a mandatory condition. So you will have to deposit 20% to claim the stay of demand. Thereafter, the bench was functioning intermittently till 1st February 2023. So it has been happening till 1st February 23. That is the tribunal bench has been happening on account of COVID pandemic, and therefore the disputed matter could not be disposed of. So it went off. So it is still lying in the tribunal. It is not completed. In June 2021, XY Limited had made an application of extension of stay. We'll keep it as what? June 2022. June 2022. Now they know that the extension is only till 30th June 2022. Now they are extending it by, they're extending for another extension. So extension can be provided for another 180 days. So in total, ITAT extension can go up to 360 days. So now by adding another 100 days from 180 days from 36/2022, it goes to what? 31st December 2022. Now, there is an important point that we need to understand in this particular situation. This extension can be granted only when the reason of failure, that is for non-disposal, reason of failure in non-disposal is not assessees. Okay, it's not assessees. So this is the provision. Provision says if the reason of failure in non-disposal of is not assessees, then in that case automatically what you can do is on this 30th June 2022, you can file for extension if it is not the problem of the assessees. In case if it is problem of the assessees, then automatically what you need to do is you need to claim, you can claim for additional 180 days. If the reason is because of the assessee, then extension cannot be granted. Now the extension is granted for another 180 days, So typically what is happening is, the rule says after this 360 days, it is automatic vacation. So the provision says after 360th day, irrespective of whether the reason of failure is due to assessee or someone else, the provision is automatic. So it is automatically vacated. The stay is automatically vacated, which means you'll have to pay the entire demand. So what is also that it means is the assessing officer will get the power to recover the demand. So this is what the question says. XY Limited and extended to 31 December 2022. Thereafter, on 5th January, yes, attached the bank account and recovered 15 lakhs against the arrear demand of 25 lakhs. Now, they want to know whether the assessee wants to know whether this is right or not. So the company requests the assessing officer to refund the amount as it holds stay. The assessing officer, however, rejected the contention, stating that the stay plan expired on 31st December 2022. So this is what is it. So now we need to examine the correctness of the assessing officer. So now this is also typically based on a case law. So as we said, the provision says it is 180 days. It can be extended by another 180 days on application. The reason of failure for not disposing the appeal is not assessees. So if that is the reason, then it can be extended by another 180 days. So the one condition is assessee needs to make an application, and he also has to make that the delay in disposing of the appeal is not attributable to the assessee. Only in that case, they can go for an extension. So the extension will go to 365 days. So another 185 days. Initially, it was 180 days. So if they can go on to another 180 days, right? So 185 days. So here it is 185 days. So typically an year. Overall, they can provide it for a year. So now what does the provision says? So if such appeal is not disputed, so if such appeal is not disputed, so that is 365 days. Now in this case, it is extended. It is extended till 365 days. And what happens on 31st December, it automatically gets vacated and hence it is recovery. So as for the provision, yes, whatever they are doing is right only. It looks like right? Because they say till 31st December, it is not disposed. And on 31st December, it doesn't matter whether the reason for not disposing the case is assessee or not the assessee. So it is automatically stand vacated. It shall stand vacated after the expiry of such period, only if the delay is attributable to the assessee. But after 365 days, it doesn't matter. So this case was considered a very recent case in Supreme Court in 2021 only in Pepsi Foods Limited. So what it was heard is, they said, if delay is not attributable, in such a case, had expired, the recovery of made by assessing officer is not in order, since the delay in disposing is not attributable to XOAZ. But the provision says something else, right? The provision says, even if it is not attributable to the assessee, you will have to give relaxation. So that is what they say. So now the court basically said, see, is it right? Is it right to go on and say? So now the court has said it is not right. So we'll just try to understand what did the court say. Court said, see, you say you give power in disposing of appeal for tribunal. You say may within 4 years. Okay. So for disposing of the appeal, you say may, you use the word may. So you use the word may, where you say within this many years, you are automatically, if you want, if you can. So they've used the word may. Within this period, if possible, finish the appeal, dispose the appeal. May within the years, dispose the appeal. Right? So that's the provision. But for this alone, you're saying automatic vacations shall stand vacated after 365 days, right? So then whose problem is this? You are taking authoritative power. So whatever income tax should give the right to assessee to a great extent possible. But here in this provision, you are taking authoritative. You are becoming like a kingdom rule. The court said, so you are becoming like an authoritative rule where no one has a say. When you say may, when you use the word may for the time limit of disposing an appeal, why don't you do the same? So they say it shall stand vacated after the 65 days if the reason of disposing the appeal is delay in disposing the appeal is attributable. The Supreme Court said, let the provision be shall stand vacated in 365 days if reason for delay in disposing the appeal is attributable to assessee. So the court said, let the provision read like this. Don't say if reason for delay in disposing the appeal is not attributable to assessee. Even then it is vacated. So now don't use such words. Better it be that only if it is because of assessee, the stance gets vacated. You need not extend the stay, but you can't start the recovery proceeding as such. So it cannot stand vacated if the reason is not due to the assessee. The court very well said that you cannot have contrary words in the same provision. For giving the power to you, you are using the word may. For giving the power to assessee, you are stating it is automatic. It's not right. That is not why the intention of Income Tax Act is all about. So the court said it is not correct, and they said the recovery proceedings is wrong. So in that contention, whatever the assessing officer has done is not correct because he cannot, because the reason is not attributable to the assessee. So moving on, we'll move on to question number 4. The question number 4 is sorry, yes.
Sir, in question number 3,
yeah,
like assessing officer, whatever he did based on the existing rule. So in that case, after the Supreme Court ruling, the whatever the law will be revised, or the law will be the same.
Typically, the law will immediately not be revised. It will stand the same. It's only a what you call is called as a precedence. So we can call it as the word precedence. So whatever Supreme Court ruling is provided is only a precedence. It sets an idea on how a provision should be interpreted, how a provision should have been framed. But it does not give the power to alter the Income Tax Act. To alter the Income Tax Act, it has to be done through a notification. So if CBDT feels, the Central Board of Direct Taxes or the government feels whatever the Supreme Court said is fine, so that has to be followed, it has to be adhered to, then income tax, the CBDT or the government will, through a notification or probably through the budget or something, will amend the provision to give impact to such ruling. They could also do the contrary. By saying, revise the provision in a manner that overrules the Supreme Court judgment. If they want, they can do that also. For example, let's take a scenario. In Vodafone case, it was held that this transfer is not a capital gain. I'll just briefly tell, I'll not go into the case. This capital gain is not a transfer. This is what Supreme Court said. So which means whatever has happened in the Vodafone case, whatever money was collected, income tax is supposed to refund. But government felt it is not right. The provision was actually misused. The taxes were actually evaded. So what did the government said is, they altered the provisions, they altered the definition of section 92B to widen the definition of international transactions, to bring also whatever was discussed in Vodafone to bring into the definition. So they overruled the Supreme Court ruling. So that is also possible. So the point here is, once a Supreme Court ruling is made, it becomes a precedence. Assessee will try to follow if it is in their favor. Income tax department will try to follow if it is in their favor. This is what will be happening. But this does not alter the act. It does not alter the act unless a notification or through Finance Act, it is introduced into the Income Tax Act.
Okay.
Is that clear?
Till the time of notification is not came, till the time all the Supreme Court ruling will be used by the government officers.
Correct. See, if it is favorable to assessee, Supreme Court ruling will be tried to be implemented by the assessee. Assessee will say, see, Supreme Court has given this ruling. It is similar to my case. So please follow this. Let's forget this Pepsi Foods. Let's say there is another issue in Coca-Cola. Coca-Cola will file before assessing officer. See, the similar issue has been dealt with Pepsi. So why don't you give me also the same ruling? Why don't you also follow the same? Now, if the assessing officer has an alternate ruling, because case laws are always situational. Each and every fact should be similar. Only then you can apply in your case also. If your case has something else, then probably you cannot adopt it, right? So assessee will try to implement a particular ruling, but it is at the discretion of assessing officer whether to follow the Supreme Court ruling or not. But he has to provide valid reasons to say why he is not following, in case if he is not following. So we'll move on to question 4. So it is basically the assessing officer with he has got the prior approval of income tax is survey. So okay, so survey comes under section 133A. He has a Good Day Cyber Cafe, which was within the jurisdiction. At what time he has gone? He has gone at 1 a.m. So this is the time he has visited the premises for the purpose of obtaining information. For the purpose of obtaining information which may be relevant to the proceedings under the Income Tax Act. Now, the timing of the cyber cafe itself is between 2 p.m. and 2 a.m. On 15th June 2021, that's another thing. The assessing officer entered. So on 15th June, he has entered Bright Light Cyber Cafe, which was also within his jurisdiction. So the same assessing officer for the Good Day Cyber Cafe has gone at 1 a.m. For the Bright Light Cyber Cafe, they have gone at 11 p.m. For collecting information. Okay, this obtaining information, that is survey falls under 133A, but collecting information falls under 133B. Okay, so these are the sections. So for survey, it is 133A. If it is not survey, but you still need to visit premises to collect some information, it is 133B. So that's what it is all about. So which may be useful for the purpose of Income Tax Act. The cyber cafe, this particular cafe is open between 12 noon to midnight. When you say 12 noon, what it is? 12 p.m. to 12 a.m. right? So this is the timing. Now what would be probably the issue is, in both the cases they have gone for they have visited the premises, and they have impounded and retained. They have impounded and retained. So they have collected the books of accounts. For what period? For 12 days, including holidays. They have obtained this books of account and other documents has been collected. So they have taken it away. So they have, when you say impounded and retained, it is taken. Impounded is taken, retained is kept to the assessing officer for 12 days. The assessing officer, however, did not take prior permission. For retaining the books, he has not taken prior permission from the commissioner for doing so. The owners of these cyber cafes, for both the Good and Bright Light or something, both of them claim that he should not have entered. So the first claim is not entered, and second claim is not taken away. So they say you should not have entered after sunset. He should not have taken away with the books in with the account of cyber cafe. So these are the two contentions. What are the contentions? Time of entry and retaining books. So this is his contention. So we need to discuss. So we need to discuss whether it is right or not, whether the contention of the assessee is right or not, whatever the assessing officer that did is right or not. Now the bright, this is from the, okay, this is only from Good Cyber Cafe. What is Bright Light saying? Assessee have to have obtained prior approval. Okay, they are also going and say that they should have got prior approval before entering the cafe, examine the validity of the claim made by the owners and the action of the assessing officer. So the issue is same. They're saying, they're talking about the time of entry. They're talking about retaining books of accounts without the permission. So this is what they're saying. So what else is given? Would your answer? Okay, they are also asking if this Good Day Cyber Cafe only for the purpose of verifying whether tax has been deducted or collected. So the purpose of entering into that premises is relating to TDS or TCS. Okay, so this is what is there. So we need to examine. So first we are going to understand the regular entry, that is for regular income tax provisions other than the TDS and TCS provision. So what does the section says? So 133A says an assessing officer in his jurisdiction has the power to enter into a premises in where a business is conducted by a person to any other place where the person occupies. It could also be verified, right? So these are the places in which he can actually go and verify. There are timings. If he is doing business, what is the timing? For any other place, what is the timing? So typically, generally, you must only do it with after the approval. So I'll probably complete the understanding of the provisions before we read through it. So we were talking about 133A provision where we said he can enter into a place where he's doing business or to any other place where the assessee has jurisdiction. Sorry. So in this particular situation, the assessing officer can enter into the premises during the business hours. So let's say he was doing business. He can enter in business hours. For other places in which business is not conducted, it is after sunrise, before sunset. So this is the provision. So if it is relating to a business, he can enter into business hours. So in this case, we saw the business hours is to be a particular thing, right? So we'll go back to the question. So it is typically what he has entered in 1 a.m. and the office hours is 2 p.m. to 2 a.m. So that is the provision. Now what the question says is, the provision says, the assessing officer has to exercise the power under 133 only after obtaining the approval, where information is received from prescribed authority and direct commissioner. In any other case, in this case, since he has obtained prior approval, so for entering he has got the approval, prior approval of the commissioner, he is empowered under section to enter into the place of business within his jurisdiction only during the hours at which such place is open for conduct of business, because it's a business place. In case if it was the residence, then no, he cannot enter at 1 a.m. and all. It has to be after sunrise, before sunset. So that's what it is there. It is only in case he wishes to enter any other place, he has to do before sunset. So otherwise, it doesn't matter. So this is what the provision says. So in this case, what he has entered, good cyber cafe is open from 2 p.m. to 2 a.m. only. So entering into a 1 a.m., which is within the working hours only, within the working hours, hence the claim made by that good day cyber cafe is not correct. It's not correct. It's not correct. So that is what is there. Further, now we are coming to the next question, retaining the books of account. We said there are two questions. One is timing, another is retaining. For retaining, the provision says, if the retaining period is greater than 15 days, excluding holidays. So 15 days excluding holidays. In that case, you need to get the approval. You need to get the approval of principal commissioner. Otherwise, it is not required. So here, what did they say? They said it is only 12 days. 12 days including holidays. So it is definitely greater than, it is less than 15 days only. But while retaining these books of account, one condition has been specified to be mandatory, that without that he cannot retain the books of account. That is, he has to provide it in writing. That is, he has to record the reasons why he has actually taken away. So further, as per the assessing officer may import for such period as things any books of account inspected by him. However, he shall not import any books of account except after recording his reasons for doing so. So for doing it any number of days, even for 1 day, he has to record reasons and only then he has to retain the books of account. But if such period is going to be more than 15 days, he has to get the approval of the higher authority. So here, how many days he has actually taken? He has only taken it for 12 days. So only if it is exceeding 15 days, he has to get the approval of principal chief commissioner or chief commissioner, PDG or DG or principal commissioner or commissioner, director. How do we actually remember these many things? Probably I'll just tell you a small thing. You can call it as tier 1, tier 2. Okay. Tier 1, tier 2. Tier 1 is equally principal chief commissioner, principal commissioner, and commissioner. Okay. These are the tier 1 category. Just a second. I'll put it in a different manner. So it's typically principal chief commissioner. When you say chief commissioner, the other alternate will be principal director general. Okay, principal director general. Similarly, you will have chief commissioner, director general. So these are the 4 category called as tier 1. Tier 2 will be chief commissioner or commissioner. Second tier will be what? I guess I'm confusing. I'll just write it again. So it is principal chief commissioner, principal director general. So this is the first tier. The second commissioner is commissioner or director. So this is only the thing. So you have principal commissioner and just principal director. So these are the 4 designations called as tier 1 and tier 2. Sorry for the time I took it to write. So the tier 1 here is principal chief commissioner, principal director general. Tier 2 is commissioner, director, principal commissioner, principal director. Wherever matters like TDS is also involved, the provision will actually use the word directors also. So wherever the matters involved TDS also, for example, 133A, the survey could be for income tax matters, TDS matters also. In that case, director will also be there. If it is only related to income tax matter, typically the authority will get restricted to the without directors, that is chief commissioner. So instead of director general, it is chief commissioner here, right? So it will get restricted to only thing. So this provision has everyone, right? That is, it has TDS also. So when you're reading the provision, when you see the names of these officers, you can remember as tier 1, tier 2. If tier 1 with TDS, all 4 will come. Without TDS, only 2 will come. That is principal chief commissioner, chief commissioner. In tier 2, you again have 4. Without a TDS issue, you will only have 2 directors. So this is how it is there. So 15 days of the here approval of both tier 1 and tier 2. Anyone from tier 1 and tier 2 can be obtained. So this is typically, this second line is tier 2. This line is typically tier 1. So this is what is the provision. So now what have they obtained? They have obtained it only 12 days, including the holidays itself. So of course, excluding the holidays, it definitely can't be more than 50 days. So prior approval of higher authorities is not required for this purpose. If you get confused, this is a beautiful word that you can use in your exam. If you actually get confused, if you are not sure about the officer whom you have to use, you can actually use the word higher authorities. You can say obtained from higher authorities. It's still okay, right? In case if you're confused alone, preferably you know the authorities. In case if you're confused, better use the word higher authorities so that you're at least saved from imagining that you do not know the provision. It is just an assumption that you may or may not know the provision. So you can use the higher authority in case if you are feeling confused. So assessing officer entering at 1 a.m. is correct. Impounding the books of account for 12 days is also correct. So both what has been done is correct. The next part is of this relating to TDS. What if they have entered that Good Day Cyber Cafe for TDS issue? For TDS issue, the provision says they can enter anytime. They can enter anytime, but they cannot for TDS. For TDS, irrespective of the premises, they can enter anytime. Okay, anytime. But for retaining books of account, they should have entered after sunrise, before sunset. So remember the difference. For TDS issues alone, for entering the premises, they can do it anytime. For business, non-business, for everything they can do anytime. But for retaining the books of account, they are not allowed to do within the after sunrise or sunset. So now when did he enter? He entered at 1 a.m., which is after sunset. So he is not supposed to retain books of account, though it is the conducting of business place. So that's the provision. So TDS provisions alone. So TDS provisions and TDS provisions, if they are going for survey for this purpose under section 133A, 133A subsection 2A says they can enter into after sunrise and sunset, but under subsection 3, they are not allowed to retain books of account in that category. So if they are entering before sunrise and or after sunset, they are not allowed to retain books of account. So that's the provision. So in that case, they are not supposed to. Whatever the assessing officer did in retaining the books of accounts for 12 days is not correct. It is not correct. Bright Light Cyber Cafe, it was about collecting information where it is basically he has entered into at a particular time, that is 12 noon to 12 midnight is a business place. He has entered only in the working hours. So it is okay. But the claim made by the assessing officer could not enter the after sunset is not accordance with the law. Provides that now it is about retaining books of account. Whether under section 133B books can be retained. So provision very clearly says no account remove cost to be removed from place where he has entered. So it doesn't allow. 133B does not allow retaining books of account. So if he has retained books of account for entering into a premises for collecting information, he is not supposed to do it. So the action of assessing officer impounding and retaining is not correct. It's not valid in law because under 133B, you are not supposed to retain books of account. That is, if you are entering a place to collect some information. If you are entering into a place for survey under section 133A, it is allowed. So that's the fourth question for the day. Question number 5, which is M & Co. So M & Co is a proprietary concern. It is run by Mr. Mannan. He has failed to furnish his return of income. So he has not filed his return of income within the due date specified under section 139(1). The assessing officer has lodged a complaint to proprietor under section 276CC. So 276CC is the offenses and offenses and prosecution. So it is typically in 276CC when return of income has not been filed within the due date, and there is tax demand. There is tax demand payable. There are limits. There are provisions different for when the tax evasion is beyond a point, lesser than the point. We'll see that in the answer. So 276CC is about offenses and prosecution relating to non-filing return of income. So they say the tax payable declared was actually 1,40,000. But he filed an appeal, and in the appeal, it was revised to 18,500. So the original, he has not filed the return of income, and assessment has happened. In assessment, it was supposed to be 1,40,000 as the tax payable. The assessee went on an appeal. Mr. Mannan went on an appeal, and in appeal, the demand was reduced from 1,40,000 to 18,500. So now it is actually reduced. Now the CIT AO accepted order and did not prefer an appeal before the ITAT. So that is not done. So now wanted to understand what is the situation in this thing. What will be the treatment? Is it okay? Whatever is done, what will be the consequences of this 276 CC? So 276 CC speaks about offenses and prosecution. One of the prosecution is willful failure to furnish. This word is very important here in offenses and prosecution, because if I remember 278A provides that if this willful intent is not proved by the income tax officer, if the willful intent is not proved by the income tax officer, then this provision cannot be invoked at all. So you cannot be levied a certain imprisonment or fine, or you cannot be prosecuted if there is no willful intention. So the willful failure to furnish a return within the prescribed time, and if there is a case where tax would have been evaded, so tax would have been evaded, there is a range, we said, right? So the tax evaded does not exceed 25 lakhs. Does not exceed 25 lakhs. It is 3 months to 2 years plus fine. There is no limit of fine. Whatever fine could be declared, could be declared. If it is more than 25 lakhs, it could go up to 6 months to 7 years. So in our case, we only spoke about 1,40,000 and then 18,500. So in both the cases, it is less than 25 lakhs. So we can stop the provision with this alone for a term of 3 months to 2 years. Now, however, in case for assessment year is not filed within the due date, prosecution will not be attracted. So there is a slight relaxation to this, saying that if the total demand does not exceed 10,000 and it is payable by a person other than a company. So there are two conditions. The person should not be a company. The tax payable after adjusting advance tax, TDS, everything is 10,000. After as reduced by advance tax, taxpayer and any TDS should not exceed 10,000. If these two conditions are satisfied, that is, he is a person who is not a company, the total tax payable after reducing advance tax, tax paid and TDS does not exceed 10,000. In these two conditions satisfied, then 276 CC cannot be invoked on a particular person. So this is 276 CC. So in our case, what is the situation? In our case, the situation is the tax payable is 18,500. So be it 18,500 or 1,44,000, whatever the case is, it is applicable. So the prosecution proceedings are maintainable. So just read these words, right? So maybe you'll have to replicate these words in your examination. You can see these words. Maintainable is a beautiful word. It's a legal language where we said whatever the assessing officer done, it's correct. It is okay. So this is what it is. So you can actually use the word where they are talking about these proceedings and other things. You can say the proceedings are maintainable. So you can use these words, repeat these words in the relevant places in your examination wherever required. So identify the keywords, use them accordingly in your examination so that it gives an impact that you know the language. So that adds value to the examination answer sheet. So that is what is there. So now the question comes, what if it is a company, right? What if it is a company? In case of company also, it is applicable, because in company, the 10,000 is not at all a condition. Whatever it's there, 276 CC could be levied. So in this case, in case of company also, the answer would be the same and prosecution proceedings would be maintainable. So that is the provision. So this is what the provision says. 276 CC says, willful intention of failure to furnish tax return. This prosecution will be invoked. The proceeding says, if tax evasion is more than 25 lakhs, 6 months to 7 years imprisonment plus fine. If it is less than 25 lakhs, then it is 3 months to 2 years plus fine. In our case, it was less than 25 lakhs, so it was 3 months to 2 years. But if it is a person other than a company, if it is less than 10,000, then prosecution will not be applicable. 276 CC will not be invoked. But in this case, it is more than 10,000, so it will be maintainable. Similarly, if it is a company, the rule of 10,000 does not apply at all. So automatically, if there is willful intention of failure, prosecution under 276 CC could be invoked. So in both the cases, what the assessing officer done would be correct and the prosecution proceedings could be maintained. So that is what it is there. So if there are any doubts, probably we'll complete the session. So these are the 5 questions that I wanted to discuss today.